Well, who would have thunk Bitcoin could have broken the grand resistance of 45K and would be pumping this week? Well, everyone is calling for it right now, but there is only one who was calling for it last week when Bitcoin was bearish, hovering around 40K. We don't follow the crowd, we make our own way. That's exactly why you are tuning in, and that's why it's time for Chico Crypto. Yep, 10 days ago we posted this candid video, breaking Bitcoin will do the unexpected by next week. And as you can see from the description, you see we said, the Bitcoin pump is going to continue. By next week, BTC will break the grand resistance of 45,000. Which we kept reiterating the next week with 2 more videos diving into the reasons Bitcoin breaks the grand resistance and will go parabolic. Well, our prediction came true. By Sunday of the next week, Bitcoin finally broke 45K. It broke 46K and got all the way up to 48K before a correction. So will this pump continue? Well, what is one of the main reasons for the pump? Do Kwon and his project Terra Luna have been on a Bitcoin buying spree. And the wallet holding the Bitcoin is fully public, nicknamed the LFG wallet, or Let's Fucking Go wallet. As we can see, they initially began with one large buy back in late January for over 300 million. This buy went under the radar and no one knew about it. Well, their buying became public this month, and they have been buying in chunks every day or so since March 21st. Which, if you compare the 14-day Bitcoin chart with Terra Luna's LFG wallet balance over the same period, you can definitely see a correlation. The more they add to their stack, the higher the Bitcoin price is going. Now remember, Do Kwon has pledged to back Terra Luna with 10 billion in Bitcoin. He announced this to the world March 14th. Well, going back to the LFG wallet, we can see that as of yesterday, the balance was just over 1.3 billion in BTC, which means they still have around 8.7 billion to go. So if they started their public buying around March 21st and Bitcoin was around 41K, 1 billion in buys pumped the price up to 48K, aka a 7K pump per 1 billion. 7K multiplied by 8.7, the rest of the billions to go. Guess what that equals? 60,900. So if the trajectory stays the same, by the end of their Bitcoin buying spree, an extra over 60,000 could be added onto the Bitcoin price, aka Bitcoin will be above $100,000, specifically over 108,000. So could this happen? Well, this run-up of Bitcoin is built on more solid grounding than the others. Number 1, Bitcoin on exchanges is hitting record lows, the lowest it has been in 3.5 years since the middle of 2018. And for one of America's top exchanges, Coinbase, it's the lowest it's been in over 4 years. The supply of Bitcoin is dwindling in places where trading of hands takes place. The lower the supply and the higher the demand equals increasing prices. And there's big demand from big players, not only Do. Micheal Saylor felt a little bit jealous, so a subsidiary of his company MicroStrategy took a $205 million Bitcoin collateralized loan from the crypto-friendly bank Silvergate to do what with? Buy more Bitcoin. And based on his history, Saylor and his companies usually begin buying Bitcoin within 48 hours of funding being secured. Although there are more reasons to believe this Bitcoin bull run is here to stay. This run-up is so different than the prior ones. Prior run-ups were largely driven by leverage, while this run-up is largely driven by spot trading. During the January 2020 run from 30K to 60K, traders were at times paying annualized interest rates of above 100% all the way up to 140% to go long and leverage, and about 70% of those trades were using Bitcoin as collateral. Today, those equivalent traders are paying just about 1.7% annually, and only 38% of them are using Bitcoin as collateral. Obviously, this run-up has a seriously more solid foundation than the last ones. Minimal Bitcoin on exchanges. This is built on spot, not leverage, and there is high demand. But you gotta know, getting up to new heights isn't going to happen without a fight. It was announced yesterday that Greenpeace and billionaire Ripple co-founder Chris Larsen were coming to lobby against Bitcoin and its current proof-of-work code. The article states several climate activist groups, including Greenpeace and crypto billionaire Chris Larsen, are launching a Change the Code, Not the Climate campaign. The campaign will buy ads in leading publications over the next month. Greenpeace, Environmental Working Group, and some local activist groups battling Bitcoin miners are also mobilizing their millions of members for grassroots efforts. The goal of this campaign? Well, the article says, Larsen said Bitcoin's power consumption issue could be fixed via soft or hard fork, both changing the network's code to make Bitcoin less power hungry. A soft fork would preserve Bitcoin as a single blockchain. A hard fork would split Bitcoin into two separate networks, one supporting miners and the other running different code, perhaps proof of stake. The campaign believes that about 50 key miners, crypto exchanges, and core developers have the power to change Bitcoin's code. The same old story. Bitcoin has a power consumption issue which needs to be fixed. Well, what people don't realize, especially Chris Larsen, is Bitcoin actually will save this planet, as it incentivizes renewable and sustainable energy technologies. CoinDesk just 2 days ago put out an excellent article titled Can Crypto Miners Make the World Greener? With the subheading, As it decarbonizes, the mining industry might help push energy producers to build more renewable power sources. The article states, for many miners, using renewable sourced electricity makes a lot of economic sense. Overall, renewable energy is cheaper than fossil fuels, so it can preserve miners' profit margins. Generally speaking, electricity from renewables is as competitive, if not cheaper, than fossil fuel-based electricity, said Jesse Morris, CEO of Energy Web, a U.S. company that is helping a consortium of miners build transparency around their energy sources, known as the Crypto Climate Accord. Not only are fossil fuels more expensive, but they are vulnerable to external price shocks such as a war in Ukraine. In the section, The Great Crypto Mining Merger, they say the incentives between energy producers and miners are so aligned that soon it might be difficult to draw a line between the two. More energy firms are entering mining, while miners are accumulating their own energy supply. Energy companies that stay out of Bitcoin mining will leave money on the table, because mining most of the time is much more profitable than selling the energy to the grid. Now, isn't this just a great example that wraps up everything CoinDesk said? One of the world's largest energy companies, Exxon Mobile, is getting into Bitcoin mining as part of its plans to reduce emissions, and is planning on expanding this to 4 other countries. The article states, Exxon Mobile Corp is running a pilot program using excess natural gas that would otherwise be burned off from North Dakota oil wells to power cryptocurrency mining operations, and is considering doing the same at other sites around the globe, which includes in Alaska, in Nigeria, in Argentina, Guyana, and Germany. Spokesperson for Exxon, Sarah Norden, said this about the project. We continuously evaluate emerging technologies aimed at reducing flaring volumes across our operations, and Exxon expects to meet the World Bank's call to end routine flaring by 2030. So what does this all mean? Well, when it can make the money and it's convenient, large energy companies mining oil will sell the natural gas they produce as a byproduct. But here is the thing, oil is often mined in remote locations and difficult terrain, so it's usually not convenient or profitable to bring the natural gas to the market. But it is much cheaper and easier to bring Bitcoin mining machinery to the oil site than, say, build out a pipeline to transfer it to the market. Oil companies like Exxon are starting to use their natural gas to mine Bitcoin instead of simply flaring it and releasing it into the atmosphere. So in other words, Bitcoin is a new type of machine that eats pollution and prints money. And Exxon Mobil is a significant commercial validation that it's really working. Their tests and coming expansions have shown that mining Bitcoin alongside mining oil will reduce emissions and improve their bottom line. And let me tell you, their competitors are taking note. The question is, are you? Cheers, viewers. I'll see you next time.